Let me ask you about the news of the day first, and that is the Fed chairman on the Hill this afternoon talking about the idea of the Fed's role in the future, supervising banks, and pushing back against what's in Senator Dodd's bill right now, the idea that the Fed would only supervise the largest banks, the largest financial institutions. He says that's a mistake. The Fed needs to be connected to Main Street as well as Wall Street. Does Senator Dodd have this one wrong?
Well, Peter, as you know, when we put forward our proposals last summer, we said that the Fed ought to retain its current banking supervisory responsibilities and have added to those responsibility for supervising the biggest, most interconnected firms on a consolidated basis. I think the bill that Senator Dodd put forward earlier this week does a good job in making sure the Fed does have these responsibilities with respect to the biggest, most interconnected firms. Having said that, we continue to believe that the Fed ought to have a meaningful role in supervising a range of banks, including some of the smaller banks, as they currently do.
So this $50 billion threshold right now of assets, that's the marking point in the Dodd bill. Perhaps that should be moved to a lower threshold?
Well, I will work with the committee as it moves forward. I think it's a fine threshold for looking at the biggest, most interconnected firms on a consolidated basis, which is a new set of responsibilities for the Fed, something that we think is awfully important in terms of managing systemic risk. It's something we believe is a very important piece of Senator Dodd's bill. We also, though, have said for some time now that we believe that the Fed ought to retain a broader range of its supervisory responsibilities with respect to the smaller banks that it currently supervises.
Yet there are still those, Secretary Wolin, who will raise the question, why should the Fed get any additional responsibilities given the way it performed during the financial crisis? It didn't see this crisis coming, didn't do a good regulatory job, the argument goes.
Well, as we've said, I think there were a range of regulators who didn't necessarily cover themselves in glory with respect to the regulation of institutions across the spectrum. We believe that the Fed is best positioned to have a meaningful role in bank supervision. They have expertise, real understanding of the markets, and we think it's important that given their various monetary authorities, that they be able to take the learning that really comes from supervising a range of banks in carrying out those other responsibilities.